studying your last two. I swim med when they turned in. The staring down to mute. And can learn the pole that sunk he died.
One of the best ways to prepare an accurate Schedule 8 is not by memorizing every tax rule, but by avoiding the most common mistakes that beginners make. Most errors occur because one or more important review steps are skipped before calculating capital cost allowance. Let's look at the most common mistakes. The first mistake is selecting the wrong capital cost allowance class. Every capital asset belongs to a specific CCA class. If an asset is placed into the wrong class, the capital cost allowance calculation may be incorrect, and future tax returns may also be affected. The second common mistake is forgetting to review whether the asset qualifies for any available CCA incentive programs. Before claiming incentives, such as immediate expensing or the Accelerated Investment Incentive Program, always confirm that the asset satisfies the applicable eligibility requirements. Another frequent problem is incomplete supporting documentation. Purchase invoices, asset registers, and other supporting records should always be maintained. Without proper documentation, it may be difficult to support the deduction if questions arise later. Another area that requires careful attention is the calculation of the undepreciated capital cost, or UCC. An incorrect UCC balance can affect capital cost allowance calculations for many future taxation years, because each year's opening balance depends on the accuracy of the previous year's closing balance. Some beginners also make the mistake of completing Schedule 8 without performing a final review. Even small errors in asset classification, calculations, or data entry can lead to inaccurate tax reporting if they are not identified before the return is filed. Finally, don't forget to update the corporation's fixed asset register after completing the calculation. Keeping the accounting records and tax records synchronized helps ensure accurate reporting in future years. Now compare these mistakes with the habits of professional tax preparers. They begin by selecting the correct CC class. They verify eligibility before claiming any incentive. They keep complete supporting documentation. They review every UCC calculation carefully. They complete and review Schedule 8 before filing. And they update the fixed asset register after every capital cost allowance calculation. Following these habits dramatically reduces the chance of errors. A professional review process is simple and consistent. Purchase the asset. Review the supporting documents. Determine the correct CC class. Verify eligibility for any available incentive. Calculate the capital cost allowance. Complete Schedule 8. And perform one final review before filing the T2 return. The important lesson from this slide is straightforward. Most Schedule 8 errors can be prevented by following the same consistent review process every time. Careful asset classification, eligibility verification, accurate UCC calculations, complete supporting documentation, and a thorough final review are the foundations of accurate capital cost allowance reporting. Developing these professional habits early will help you prepare more accurate corporate tax returns. Avoid common beginner mistakes and build confidence whenever you complete Schedule 8. Before filing a corporation's T2 return, experienced tax preparers complete one final review of Schedule 8. This review acts as a quality control checklist and helps ensure that every capital cost allowance calculation is accurate, properly documented, and fully supported. Rather than jumping directly to the calculation, they begin by asking a simple question. Is this a capital asset? Only capital assets are included in the capital cost allowance system. If an item is actually a regular operating expense, it should not be reported on Schedule 8. Next, confirm that the asset has been assigned to the correct capital cost allowance, or CCA class. Each CCA class has its own tax treatment, so selecting the correct class is one of the most important parts of preparing Schedule 8. Once the CC class has been verified, review whether the asset qualifies for any available incentive programs. For example, is the asset eligible for immediate expensing? Does it qualify for the Accelerated Investment Incentive Program? Or should it simply follow the regular capital cost allowance rules? After selecting the appropriate treatment, review the calculation itself. Confirm that the capital cost allowance has been calculated correctly and that the remaining undepreciated capital cost, or UCC, has been updated accurately for each CCA class. Next, review Schedule 8 carefully. Check that every figure has been entered correctly and that the completed schedule agrees with the corporation's accounting records and supporting calculations. Finally, verify that all supporting documentation is available. This includes purchase invoices, the fixed asset register, financial statements, the general ledger, and any working papers used to prepare the calculation. Having complete documentation makes the return easier to review and provides support if questions arise later. Professional tax preparers often remember this review using 5 simple steps. First, review all assets and supporting documents. Next, verify the CCA class and eligibility. Then calculate the capital cost allowance and remaining UCC. After that, document the completed Schedule 8 and supporting records. Finally, file the T2 return with confidence. One of the most common beginner mistakes is rushing into the calculation before reviewing the supporting documents. This often leads to incorrect CC classes, missed eligibility requirements, inaccurate UCC balances, or incomplete Schedule 8 reporting. Taking a few extra minutes to perform a complete review usually prevents these errors before the return is filed. The most important lesson from this checklist is simple. A complete review before filing helps ensure accurate capital cost allowance calculations, correct incentive claims, updated undepreciated capital cost balances, complete supporting documentation, and a properly prepared Schedule 8. By making this checklist part of your regular workflow, you'll prepare more accurate corporate tax returns, reduce costly errors, and develop the same disciplined review habits used by experienced professional tax preparers. Throughout this Schedule 8 chapter, we've learned that preparing capital cost allowance is much more than completing a tax form. It is a structured process that requires careful planning, accurate calculations, and complete supporting documentation. Let's summarize the professional habits that help prevent errors. Everything begins with identifying the capital asset. Before anything else, determine whether the item is truly a capital asset or simply a regular business expense. Only capital assets are included in the capital cost allowance system. Next, determine the correct capital cost allowance, or CCA class. Every asset belongs to a specific CCA class, and selecting the correct class is one of the most important decisions in the entire process because it determines how the deduction will be calculated. Once the CCE class has been confirmed, review the asset's eligibility. Ask yourself whether the asset qualifies for any available incentive programs, such as immediate expensing or the Accelerated Investment Incentive Program. If no incentive applies, the regular capital cost allowance rules will be used. After confirming the correct treatment, calculate the allowable capital cost allowance carefully. Use the appropriate rules for the applicable CCA class and incentive program, making sure every calculation is accurate before proceeding. Next, update the undepreciated capital cost, or UCC. The remaining UCC balance becomes the starting point for future capital cost allowance calculations. So maintaining accurate balances is essential for future taxation years. Once the calculations are complete, prepare Schedule 8. Review the schedule carefully to ensure that every figure agrees with the supporting calculations and the corporation's accounting records. Finally, maintain complete supporting documentation. Keep purchase invoices, the fixed asset register, Schedule 8, financial statements, the general ledger, calculators, and working papers organized and available to support every capital cost allowance claim. Before filing the T2 return, ask yourself a few final questions. Is the CCA class correct? Is the asset eligible for the selected treatment? Was the appropriate incentive applied? Have the calculations been reviewed? Is the remaining UCC accurate? Has Schedule 8 been completed properly? And are all supporting documents available? If every answer is yes, the corporation's capital cost allowance calculation is much more likely to be accurate and complete. The most important habit professional tax preparers develop is consistency. They follow the same review process every year, regardless of how simple or complex the return may be. The key lesson from this entire Schedule 8 chapter is simple. Every capital cost allowance calculation should follow the same professional process. Identify the capital asset. Determine the correct CCA class. Verify eligibility for any available incentive program. Calculate the allowable deduction accurately. Update the remaining undepreciated capital cost. Complete Schedule 8. Maintain complete supporting documentation. And perform one final review before filing the T2 return. By following this disciplined approach every time, you'll reduce errors, prepare more accurate corporate tax returns, maintain reliable asset records, and develop the professional habits that experienced tax preparers rely on when completing Schedule 8.